You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 6th day of March, 2020. Thanks so much for joining us. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, point any internet-connected browser to YouTube or to CFRN.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You can also point your browser to youtube.com/CFRN/live. You'll also find us streaming live on our Twitter channel, on our Facebook page, and on TradingView, tradingview.com. Today we're not broadcasting live on tradingview.com. We've had some glitches with the audio encoders, and I don't want to bore you with a lot of technical noise, so suffice it to say, we're not live on TradingView today, but hopefully over the weekend, those glitches will get worked out, and we'll be back live on the TradingView platform early next week. Okay, so let's take a look at the daily chart of the S&P 500 Emini Futures. Bearish cross, price pulled away, price pulled back to the 50% reverse fib. Now we're working our way back down. Okay, we've had a lot of great trading opportunities over the last couple days. I'm going to point out during today's broadcast everything that we've done over the week with Logic 247. That's our real-time alert service, 24/7. And also our Concierge Trade Alerts, which is our static report published every evening shortly after the Globex Open. And to all of our traders who were able to take advantage of all of the opportunities the market presented last night, well, that bell is for you. Fred, I see your question. Yes, I will be covering everything that happens with Concierge Trade Alerts and Logic 247, everything that has happened over the course of the week. So stick around, and we'll get to that just a little bit later in the program. Let me see if John has logged in yet. All right, I don't see him. I'll jingle his phone. All right. While we're connecting with John, let me go over the numbers from around the world. These are the cash markets, the indices.
Hi.
Are you ready?
Yeah.
All right, starting here in the U.S. Currently, the Dow is down 621 points. That's over 2%. NASDAQ is down 260 points. That's almost 3%. S&P 500 down 87, almost 3%. And the Russell 2000 down 33, again, over 2%. In the commodity basket, crude oil down $3.39, trading $42.51 last. That's a drop of over 7%. And I'm pleased to say that every one of the CFRN traders had an opportunity to take advantage of this move last night, starting right here at 46 bucks. We triggered during the 8 p.m. Eastern candle, and we've dropped from 46 to 42. That's a $4,000 per contract move. I'll say that again. It's a $4,000 per contract move. And every one of our traders had the opportunity to participate in this move and the move in the S&P and the NQ. I'm going to go over all of them with you. Just waiting on John to show up. Gold is down $4.30, trading $1663.70 last. In the Asian markets at the close, Nikkei was down 579. It's almost 3%. Shanghai down 37. That's over 1%. And the Hang Seng lost 621 points. That's a drop of well over 2%. And in the European markets at the close, FTSE down 242 points, 3.5%. DAX down 402. That's a little over 3%. CAC down 221. That's a loss of over 4%. That gives us a red day in Asia, red day in the UK. And it's a big red Radio Friday here in the US of A. Let me see if John's here. We'll open up his mic. There he is. And John, welcome to the show. John, are you there?
Yeah, is there
Welcome to the
I'm
show.
hearing a voice. Is there a voice?
I'm sorry? What's the issue, John?
I can hear the audio, the audible ad in the background.
I don't. Do you have another browser window open or something? Because the Audible ad's not
no,
playing right
hang
now.
on.
Maybe you've got your Twitter page
It
open.
doesn't.
If you look at your browser tabs across the top, any one that has a little speaker, that tab is broadcasting audio. So, I'm not sure. But yeah, the intro already played. We're already past that part. So, could be you have a Facebook page open where one of the old broadcasts is starting to play. If you have a tab open, that could happen on Twitter, that could happen on Facebook. All right, while John's getting that squared away, if you would like to grab a screenshot of last night's Concierge Trade Alerts, I'll drag them up on the big screen, give you an opportunity to do that. Okay. Now, this is the static report that comes out every evening shortly after the Globex Open, Sunday night through Thursday night. The numbers are good for the entire session. And most days we see multiple triggers at these prices because important prices and important areas are almost always tested. So when we finish talking with John, Michael's going to do a recap of what happened in the live training room. Then I'll be breaking down each and every one of these alerts in detail. In the live training room, we use a range chart to teach you our methodology and our strategy. It's a fast chart because we want to be able to show you as many trading opportunities as possible during each 2-hour training session. And our training room is open Monday through Friday from 9:30 a.m. to 11:30 a.m. Eastern. Now, the beauty of our methodology is that it's fluid across all markets and all time frames. So what you learn in the live training room on the range chart, you'll be able to translate that. Hey, John, are you back?
Yeah, sorry about that.
No worries.
Recording.
Okay.
Didn't realize.
So let me just finish my statement here. So what you learn in the live training room on the range chart, you'll then be able to take with you into the larger time frames, the 30-minute, the daily, 4-hour even. Everything we do fluid across all markets, all time frames, and I'll get into that later in the show. But right now we'll talk to John. John, welcome to the show once again.
Okie doke. It's been a pretty incredible night and morning or day, even 24 hours since we last came on. And we've got some really astounding kind of developments today. The market, they had this, right about just before the market opened, Trump came on and he was signing that bill, and that caused some of these medical stocks to go up pretty dramatically, like we suggested they probably would yesterday. Mm-hmm. And just a second. So anyway, so we had a bit of a rally, and I looked at the gold this morning when we were up about 20, and it was looking like a double top against the previous high. And next thing you know, we had a kind of a sell-off, and then we went right back up. That's not unusual, because when there's a big move overnight, sometimes they like to knock the gold down to give the traders a chance to get in, more or less at last night's entry price. And that was accomplished, but then it ran back up. And when the rally started, two things happened. They knocked the VIXs down, which are insanely higher today. As we suggested they would be, because there's just like the whole world is in these VIXs looking for insurance. That's kind of a positive for the market at some point. Secondly, when they knocked the gold down big time, it sort of went negative. And just a second, sorry, I have to pause for a second.
Go ahead. Guys, last night's Concierge Trade Alert on gold, which John is talking about right now, was to sell 1658. We put in a swing low at 1644. Now, previous day, the alert was to buy 1645. Now, you've heard me say more than once, important prices, important areas are almost always tested. So look at what happened, okay? We had a buy at 1645. We had another buy at 1677, which is going to be right up here. Drag it down. There we go. So all of our traders got these alerts to be long 1645, which took us up to 74. That's about a $3,000 per contract move. Then we had 3 opportunities to be long gold at 1677. That's about a $1,500 per contract move. And all of our traders were given the alert to be short 1658. Now from 1658 to 1644, it's a $1,400 per contract move. But what I really want to draw your attention to is here, important prices, important areas are almost always tested. So you see how price came back to that alert from 2 days ago, found support, we're off to the races again. Okay, now that's gold. If you did not get a chance to grab the screenshot, okay, this is the static report that comes out every night shortly after the Globex Open. If you want to grab a screenshot of the day before, there you go. And if you want to grab a screenshot of even the day before, there you go. You can always go to youtube.com/CFRN and you'll find a archived recording of each day's live broadcast, this broadcast we're doing right now. You can fast forward up to the point where I'm doing the recap of the alerts, and you'll see how they unfold, kind of like clockwork, day after day after day. Okay, trading's not easy, but when you have a methodology and a strategy, when you have meaningful indicators and understand how to use them, trading's still not easy, but it can be simple. And that's our goal, is to help you find simple. Just remember, whatever brought you here will not take you there. John, are you back?
Yeah.
Okay.
The market's trying to turn here. And
are you talking S&P?
Yeah, well, yeah. Look, we had this sort of lift off this morning, had a kind of a 3-wave pullback. This is about where we should turn, if we're going to turn. And
I don't think we are, John.
Well, look, let me just paint a picture for you, because it could happen.
Okay, yeah, it could. I embrace all possibilities.
Yeah, let's just say that some intervention comes in or something, and they get this thing going, and we're on a kind of a double top on the VIXs right now. If they start, if they actually got a decent rally going, the VIXs could take a kind of fall. And actually, I have seen days, sometimes these VIXs get over subscribed, if you like, or overbought, oversold. No, there's too much premium in them. Okay,
I see.
They get overpriced, and the the way to really, fix that is to burst the bubble. Okay, so and if look, last Friday we had a blistering rally in the last 20 minutes. I don't, while you can't rule something like that out from happening, I would like to think a rally might get going sooner today, given that the market is potentially poised for another leg up, even if it's going to go down after that. But it may not rally. I mean, that's the problem with the really since 2 days ago, since that close of, since the all-time, no, the second big close, the second big Dow close, that was the one that, failed right at the close and gave a sell signal, and we've been going down pretty much ever since. So, in other words, every single rally has failed, and it's continuing to fail. Even this morning's rally, the one that finished earlier on. So, we have to rally this afternoon. Otherwise, you can't even imagine what will happen next week. We're absolutely going to, have some sort of a catastrophic meltdown, possibly hit new lows, given the way the VIXs are going. So, but if there was a really dramatic rally this afternoon, and the VIXs start painting lower, you actually could get a big down day. Not unlike the gold. I mean, the gold is kind of an example. Here's an asset that was bid up on fear, right?
Right.
And right now it was up $20. It's kind of unchanged at the moment. Doesn't mean to say it won't go back up $20 before the day's out. But I kind of saw that coming this morning, and it's not inconceivable that the fact that the gold hasn't rallied may be sending a bit of a signal here that perhaps the fear factor is a bit overdone. So we're certainly, look, the VIXs have gapped up like monumentally. This was
Which VIX you want to look at, the UVXY?
Well, let's look at them both. The UVXY.
Okay.
And the UVXY and the TVIX. So look, you've had this incredible. I mean, this is a big gap today.
Yeah,
this is
huge.
a really big gap. So that's the TVIX. Holy mackerel!
That
I
is
was trying to buy that thing at 39.
That is. Well, that's what I've got up here is TVIX.
That's a five-fold gain in that thing. Five-fold. Jeepers. That's amazing. It is a really big deal. So, in fact, can you put the historical up on that?
Sure.
See what that
I'm going to
looks
go
like?
back, their daily.
Yeah. Yeah, look at that. That's incredible. Have a look at, we actually said a while ago, but if you can put the UVXY up, I think we had some targets on that one. We kind of said 35, so we have already hit that. And, I think we talked about possibly hitting the 40 level and maybe the 45 level. Somewhere up around maybe that 45, it's probably going to get a bit overdone. But if you remember, in that consolidation a few days ago, we warned that, how bullish this thing looked. And as a matter of fact, I got a buy signal, not yesterday, the day before, that actual down day. There was a doji on the 90-minute and the 60-minute, 90-minute, a few of those. There was a doji there, which was a kind of a giveaway that we might actually go higher. So, look, if you go back and look at the historic, I don't know whether you can see it. Let's go back to 2018, if you can, on that.
2018, sure.
Yeah. So, look, you see that spike top? No, this is the one I'm thinking
2018.
of. Yeah, 2018. See how we had this big down day? You see that? I mean, the huge down reversal.
Yeah, right there.
That was the day that.
looks like that was February the 6th, 2018. Okay. All right, guys. Let's get back to this. You've got a copy. You got a screenshot. Are you back, John?
Yeah.
Okay.
Yeah.
All right. There you go.
So, yeah. So look, that huge. See that huge down day?
Right. It was February 6th of 2018.
Right, and that was that. I think that was a Friday, if I remember rightly, either a Tuesday or a Friday. And you know that was the day we on this show we actually called the rally. If you remember, I said this thing's going to rally like crazy, and we had a monumental rally that day, and again another one on Friday, around about the same time. So you know that's one of these cases where the VIX opened extremely sharply higher and then sold off. So you have to be very careful of these things up around these levels. You know, you don't want to be buying the highs of them because you could get your head handed to you if there's a sudden move out of nowhere. And in fact, right now I'm getting a bit of a sell on INO, which I talked about a couple of days ago. Was a very bullish situation. It's just hit 14 this morning.
Here's the daily. Right.
Yeah, I call that, you know, well, I've been talking about that since it was about $4. But anyway, look, this is a very powerful situation. It was a bit agonizing yesterday because although it looks like a clean buy sell, there was a lot of jerking around yesterday, and I did a pretty good job of buying the dips, but late in the day I bought, you know, I thought it was going to run through 10 and I missed it, so I had to buy it higher, which I didn't like doing, but I was happier about it this morning. So,
Sure.
But anyway, I think, look, this thing is incredibly powerful, and probably, unless there's some kind of a gigantic development today in the markets, will potentially open higher next week. Just look at the weekly on this. Check out the weekly on this stock.
There we go.
I mean, look at that. Have you ever seen anything like that? It's
That's
just
pretty
crazy.
incredible, yeah.
Yeah, and actually, if you can go all the way back to 2000, I was actually telling people yesterday afternoon that this was an incredibly dynamic situation. You know, you see, when you have a big run up like you did to 16 before, and then you come all the way back, and then you start another run. It's a little bit like
this thing traded almost $200 at one point.
Yeah, exactly. And in other words, it's got a lot of upside, this stock. Certainly, it's got at least 16 and probably 17, 18 at least. Could go to 25, and then I think that 2003 high, I'm not sure what that was, but I think that's a 25 level right there. So
right here, there's potential resistance overhead at $30, but that means it could potentially double from here. If it can get through that area, what I really like is an opportunity to be long about 70 up to 100, a nice $30 move in there. Hey, you know, but there's a lot of work to be done.
I mean, this is actually, Dwayne, this is like dry ships all over again, you know. And it's very interesting because, you know, for the benefit of new readers or new listeners rather, we call dry ships or I call dry ships at $4 or $5. You know, I said go long, went to 100 in how many days? 5 days. 5 days went to 100. Got to 102. I said to sell it at 102 and short it if it fell back to 101. Or no, I said it was 102. I said sell it at 101 and go short at 100. 3 days later, it was back to 9. And then
does dry ship still trade?
No, it got taken over.
Okay, that's right. That's what I thought.
Yeah. So this is a little bit like that because this, I mean, as I tried to explain a few days ago, and we were way ahead of the curve in figuring this out. Look, if this vaccine works, that they're the first. Look, they're way ahead of anybody else in terms of the vaccine. there's a pretty good chance that Trump
Is
is
this
going to
the
dole out some
Is
money.
this the Israeli company?
No.
Well, Congress just
this is-
approved $8 billion this morning.
Well, exactly, and I wouldn't be surprised if Trump gives these companies. If you're the CEO of the company, you met at the White House, he's probably calling Trump and saying, can you advance us 50 million or 100 million, something like that.
Well,
and
New
if they
York-
announce something like that, that would probably push the stock up another $5 or $10.
In
That's the
New
first thing.
York, John, the coronavirus cases have tripled over the last 48 hours.
Right. So this has taken on a new urgency. Now, the second thing is that this is not going the same way as some of these ramp ups that go up $10 in like a day. It's just not going the same way. It's a little bit more difficult. There's a lot of back and forth even today. But if their virus works, this could be $1,000 stock.
If
this
their
could
vaccine,
be,
if their vaccine works.
Yeah, because the whole world, they'd be, the whole world would need to get vaccinated.
Sure.
To get, so this is a very, very big deal. And I would just be very, very cautious trading this thing because there's no look. Just show NNBC.
Let me show you this real quick, and then I'll pull that up. Why coronavirus could be the U.S. housing market's unexpected savior. You see this? U.S. rental properties are getting an influx of foreign buyers looking for the next coronavirus safe haven. Because we have the best medical technology, the best medical practices here, the United States is seen as a safe haven for the next, coronavirus or whatever it's called. So, unfortunately, many Americans right now can't afford to pay the rent because of the rising cost of rent in America. And this is only going to make that situation even worse. We've got this incredible homeless problem right now. There's people here in Phoenix. I went downtown with my wife the other day to just survey how bad the problem has become in downtown Phoenix. There's reports in the
I'm
local...
getting a strong buy on the market right now. I told you this thing is going to rally. This thing could be very big. The thing is, when these rallies come, they're always bigger than you think. That's why you have to buy them.
It's right at resistance right now. So
yeah, no, I think it's going to go. I think I look at this. As a matter of fact, I projected up to about. I only do the Nasdaq, as you know, but I'd say it's probably going. It's going at least 100 points, maybe 150 points higher from here, right now.
From here, I see 25 easy.
Yeah.
Probably 50 after that, and then the next one is going to be. It'll be 100 point. Well, just about 100 points.
All right, guys. Well, if price can get above, if price can get above the BBC and hold a pullback, then I'll join you guys on the long side of the table. But until that happens, I got to keep my blinders on because we're in a downtrend.
Dwayne, we're putting in already. I can see, really potentially very powerful setup developing here. And don't forget there were 270,000 jobs created.
It looked very powerful this morning too on this one right here.
Yeah, but this is the way these things.
I
this is the
explained
way
to folks
these things
why I
happen.
failed there in the live training room, and that's kind of what happened. So anyway, go ahead.
Well, look, believe me, this day, Friday. Listen, it happened right on the show, right about the same time in February, the Friday of February, 2 years ago. So, and there was a blistering rally that went positive, and once it goes positive, it just keeps going. I mean, listen, United Airlines is up today. Boeing is up, FedEx is up. Remember what I said yesterday, when these stocks start going positive, sync, or the entire market goes positive together, it moves the index, even no matter where they're coming from, even if you're down in the dumps, it changes the whole equation. We were down about 800 on the Dow, 700 or 800. We're only down about half of that right now. So it's, look, we're not out of the woods just yet. I said we could rally, but then we might go lower. So be prepared for that. But at least we got the rally. That's the main thing so far. And the second thing is that we are potentially set up for, a bubble, a pop of this UVXY. Listen, the crazy thing about this UVXY was when we were going up, you know, when we started going up from the double bottom at 11 on the UVXY, I'm scratching my head and saying, you know, why isn't this thing going like higher? Because it's kind of like being suppressed, and it probably was being suppressed to try and, you know, hold the market up. But the market went down, and it was only, and the crazy thing is, you know, we've been in a trading range, and the UVXY has been going higher and higher and higher, you know, without the market really going anywhere, which is crazy. So the premium, in other words, what does that tell you? It means that, you know, every fund manager in the world is seeing the UVXY as a kind of a, you know, portfolio insurance, just like 1987, and you know that can have consequences. So, but now it's coming off a bit. However, we, you know, and this is important because, you know, if this rally fails, obviously, you know, it's not going to happen today, plain and simple. But we did get some good news today on the jobs. Sometimes the market takes a bit of time to digest that, and, you know, is it going to ignore it and keep going down? But you know, we just have to, you know, you just don't know how much power or intervention is coming that we just don't know about yet, and it could be brought to bear later on today. Maybe they don't want to rally the market too early, you know, because obviously on a day like today, it's better to rally the market late, because if we go positive late, it kind of changes the whole equation. Now, we do have the makings of a potential bottom here. It may, if we go a bit higher, like you suggested, that bottom will look better and better as we go higher. The other thing is,
I think we're going lower from here. We've already popped up.
Let me just say something first. We had a tremendous rally off a very deep low last Friday, and continued. We had two back-to-back record days almost, and then we ran into trouble. However,
see, last Friday, that was the 28th, right? That would be this day right here, right?
Right. So bottoms.
So we ran up to the 50% reverse fib on the daily. Okay.
Gotcha. Yeah. So what happened is we had a test on the middle of the week, and we rallied up. You know, we had the second record update.
Back to the 50, right? But we put in a lower high.
Okay. What could, you know, the best case scenario for the market, and I emphasize the best case, is this is like a retest, but it's not going to a lower low, right? And if this thing, in other words, if this thing starts rallying out of here really dramatically this afternoon, it would say that the market has potentially put in a bottom, and it's actually going to go up quite a bit from here, and that would actually send the VIXs down big time if that happened. So,
you know, if we get an up close on the current bar right now on the 30-minute chart, if we get an up close on the current bar on the 30-minute chart, I think, and this is just my opinion, we're going to see 30-30 again.
If it gets through the BBC, then it's got to struggle to get through where it failed this morning on the rally. So, you know, I'm not saying that we can't trade higher, but this market has a whole lot of work to do before any of that unfolds. I mean, right here we're at resistance. I mean, you can see the wick showing. What do we got? We got 17 minutes left in this 30-minute candle. You know, embrace all possibilities, folks. Anything can happen. Trade what's in front of you, not what you think should be in front of you, but what's in front of you right now. So,
you know, these are exciting times.
On 30-30, I'd join you on that. I think that's a definite possibility right now.
That's where the market last night, Globex open, price rallied up to the weekly trading zone at 30.33 and the BBC. We found resistance, which is what we anticipate in that scenario. And then our alert to all of our traders was to be short 30.12, and we dropped $4,600 per contract so far. Now, we've got a leg, a retracement. The market is trying to build a leg here, but it's got to get through this resistance, and it's got to get through this resistance, and then it's got to get through this resistance for it to be meaningful and take us back up to that zone overhead. I have no doubt that we'll see those prices at some point here in the near future, because price on the daily has to get back to the BBC.
once it gets through that second level that you had just talked about, Dwayne, it's like, what did he used to call it? Clear waters. That's what he used to call it, right? Remember that guy?
Well, that's if you can get above this
Yeah,
obstacle
you got to get above there.
and this
then you gotta get above
obstacle.
there.
Yeah, if
Yep,
if
and
that
clear
happens,
water.
absolutely, there's a window of opportunity right there.
I mean, we went over this last night in the partners meeting. I have all the drawings on my charts,
Right.
and you know when I get the charts, I'll just show them to you.
Yeah, look, this is definitely starting to look very good. Take a look at, let's put up Apple, if you would, Dwayne, please.
Apple. Yeah,
Gotta go to trade.
I sure can. Fred, I will open up the slingshot so that you can see it a little later. That's more applicable on the shorter time frames, but I do look at part of it with the larger time frame trades, and I'll go over that with you when we get to that part of the program today.
And right now, it's a little bit bullish on the short. I
Here's
mean, on
Apple.
the longer time frame, on the 30.
Okay.
On the 30 minute.
Look,
That's a
this is
30-minute. You want daily, John?
No, that's fine. Look, this is actually, leave it like it is.
Okay.
This is great. Look, we made the low last week, right? And a blistering rally that got an upgrade, strong buy or something from somebody. This is, look at the setup here. We've opened lower. We're getting a kind of a spring, kind of a dynamic buy signal
Leg
here.
or retracement, and yep, now we're going to go up and try to
Look
challenge.
at the difference.
that high.
Apple is way higher than the picture we were just looking at, which is the S&P. And the reason why it's down there is because it's been dragged down by United Airlines and all these other things. So you're getting a kind of a distorted picture. A much more realistic picture is you have a kind of a couple of days of trading where we were down here, and now we have the potential to actually get back to the kind of upper half of what actually is not too bad of a situation. If you go to United Airlines,
United Airlines, sure.
UAL.
Go UAL. All right.
Okay. I mean, it's actually looking like it could go up further today, maybe 57, maybe even 60. Okay, go to Intel, INTC.
There we go.
Intel, actually, if you go to a daily, I think Intel doesn't look too bad.
There we go.
No, it was. I must be wrong on that. Actually, if you remember, we talked about Intel before the crash, and we said that it looked like there was going to be an island top, and unfortunately, it's turned out to be the case. Potentially very dangerous. Look, if Intel broke down and we had a second island of this entire November through February, that would really do a lot of damage going further down. So we are in a world of hurt here, and the potential for a rally is trying to get a rally, trying to get some traction, but it's not making it yet. So
you talked about the NQ a second ago. The NQ is flirting with its 200-day moving average, which a lot of traders watch that 200-day moving average, and if price does get below it, you'll have a lot of computerized algorithmic type trading programs that kick in and start selling that thing.
Yeah. Now, look at ZM. Have a look at ZM.
Zoom. There we go. Okay.
Yeah, that took a big hit today.
Yeah, it did.
So that had a huge update yesterday, and it's kind of given it all back and then some.
Down to $12.
Right. So so right now we've got a kind of a developing sell here on the indices, but if by any if they can get back up towards what would be on yours, probably about 2,975, somewhere like that, if we can rally by that much.
Tell me which market, John? 2970.
On your S&P.
On the S&P.
ES.
Okay.
Yeah.
Yeah, 2975. That's where we rallied up to. And this morning in the live training room, I drew this rectangle as we were building these green candles. I said, guys, if we can get above the BBC, look for price to stall out and drop as we approach this swing low. And it unfolded beautifully. Sometimes the market just does exactly what it looks like it's going to do, and sometimes
it does what it should do.
Yeah.
And it was, the bounce off of the weekly trading zone. Give a 10-point bounce right off the weekly trading. I remember one of the fellows in the room this morning said,
we hit the zone, we bounced 10 points, then we went back to the zone, then we opened again, we bounced 14 points, and then we came back, and then that's when it failed. And so as you can see right now, we're going to end up this 30-minute candle. We got 10 minutes left in the life of this candle. We've got wick sticking up above the BBC. If we're left with nothing but wick sticking up above the weekly trading zone as well, on the next 30-minute candle, we'll be looking on the smaller time frame for opportunities to be short, back down to test these lows. And if there's heavy selling that kicks in, then we'll go and look at these lows as well.
But I think on the upside, we're looking at 30-30 on the upside. And we said that last night. We came up with that last night. And
I don't foresee that happening today. Maybe next week.
It may not happen today, but over the weekend, something big is going to happen. We just lost you.
Unfortunately, all the news we get of late, is not good. So we could use some good news, that's for sure.
We could.
The jobs numbers were good today, but you might want to take a snapshot and put it on the wall because of the coronavirus, you probably won't see job numbers like that again for quite some time.
I don't know. In certain places, even here in the U.S. now, in certain places, they're like telling everybody don't come out of your house.
Another thing to think about is, look, people get used to situations after a while, so, look, explain to me.
We evolve.
Look. The point I'm trying to make is, and this is what I do every day now. I'm looking out of the 10,000 stocks or whatever there are, I'm looking to find, stocks that are safe buys for today and potentially safe shorts for today. So a safe short for today would have been Zoom. It was a safe buy yesterday, turned out to be a safe sell today. INO turned out to be a buy yesterday. It might be a sell here if we sell off later on. Could happen. But it continues. Right now, if I was long this stock, I'd probably put stop at about 1370 or so, just in case. There's always a chance. Look, when a stock goes straight through 10, it has a habit of coming back and testing. So keep that in mind. This is notwithstanding, is a very powerful situation. United Airlines, FedEx. I basically had an idea that a number of stocks were going to be buys today, and it turned out kind of better than I expected, to tell you the truth. Roku did rally. It sold off first, but then it rallied up. But it's really, this stock has really been under pressure since that terrible sell-off.
Now here we're at support. So the potential for if Roku doesn't find support here, then let's go look and see what potentially happens.
Yeah, when Roku
fails,
turns, when it decides to turn, it
85.
can be really can be a great stock, and I think it's a bit overdone. There's actually a lot of stuff going on with Roku that's kind of like not necessarily disruptable by by what's going on. Their stuff is embedded in a lot of TVs, and they're potentially maybe they've got a lot of inventory. Who knows? So I think that. I mean, I have the feeling. I said on the show I thought it might come back to 80, so it still could. But I think at some point it's like, have a look at Beyond, BYND.
Is that Bed Bath and Beyond?
No, the meat.
Oh,
the
Beyond
meat
Meat.
thing.
Okay, gotcha. Yeah.
See,
I had one of those
if
burgers
you-
the other night, by the way, at Burger King. I finally broke down, bought one, and all these people that say they can't tell the difference, it tastes exactly the same. I wasn't fond of it at all. So,
Yeah.
not to
I
say
mean,
that it isn't
look,
good. I mean, it's just a personal preference. I just didn't like the taste. I could certainly tell that it wasn't the normal beef Whopper that you get at Burger King. It wasn't bad.
Yeah.
Wasn't bad at all. I could eat it every day if I had to. But given a choice, I'll go the other way.
We've done quite well with Beyond. We actually called that high back in July, if you remember. Suggested it was going to go the same way as Tilray, which it certainly did until it based out going into the new year. And we called that rally the first day, if you remember, off that 70 level. It went back up to about 130 something, and has kind of rolled over since. But again, we've got a little bit of a buy developed.
John, I think we lost your audio.
Yeah, he's been going in and out.
Thing on this
Okay.
today. So, if we why? Jesus.
I'm sorry, say again?
Can you hear me?
Yes.
Yeah, now we can.
Yeah, can you hear me?
Yes, I can hear you now.
Okay, I had a brief system outage. That's what happened.
Okay.
So, okay. So, like right now, we'll just have to trade it minute by minute, see how things are going. But it's really, these VIXs now are really, all kinds, sort of like Mount Everest territory. It's like.
Yeah, no, we're trading in the land of giants. I mean, I pointed this out last night, and let me show it to you. Let's see, where did I put that? I put it in the.
Yeah, I think we're going to have
channel.
another shot at the turn here now. This turn is really important. If we can get back up towards the highs, that would be quite a good development. So
last night.
We have less than 3 minutes on this candle.
Nice blue, we have that. Where did I put
30
that?
minutes. And
Shortly after the Globex opened last night, and I posted a chart here, I'm not seeing it. We had one 30-minute candle that had a 19-point range shortly after the Globex opened on the S&P. Now, the average daily range of the S&P, for decades has been about 20 points. Here it is right here. The current 30-minute candle, I posted this so that would be 7:53 p.m. Eastern. The current 30-minute candle has a 19-point range. Under normal, now that's at night on a Globex session. Under normal market conditions, the entire daily range of the ES is about 20 points on average. So you're right, John. We are in the land of giants.
Yeah.
Mount Everest. What else you want to look at?
yeah, so we'll just have to see. Thanks for bringing that up about Sunday night, Mike. That's the thing that could change everything.
Now, again, in the last 48 hours, the number of cases in New York have tripled. So, I mean, if we continue in that same vein, then the Sunday night Globex Open is going to be just a massacre. Hopefully, we do get some good news. Hopefully, there's, a drop-off in the number of cases being reported or the number of deaths, or somebody says they're getting closer to a vaccine. This market does need something positive to happen, because if we don't get something positive, I mean, here, let me put
Well,
this
there's about 55,000 recoveries right now. and the recoveries are actually going up faster than the infections. The infections have accelerated a bit today, but the gap is actually widening, believe it or not. So that's kind of a positive, but unfortunately, the infections are going exponential, so it looks like that gap might widen.
Okay, now this is a weekly chart of the ES continuous contract. Okay, on the weekly chart, this last leg up, weekly, we hit the 50% Fibonacci retracement this morning or yesterday, and we caught quite a bounce. I'm sorry, this is a weekly. So look what's happened. We came down to the 50. We bounced it to the BBC. The BBC rejected it. Remember, when we approach from below, we expect it to be good resistance until it isn't. So, I mean, what's on tap is if we go to the 62, that puts the S&P down around 2,700, 2,750. And if that gets taken out, well, everybody remember the worst December since 1932, which was Christmas 2 years ago, 2018. Worst December since 1932. I'm not saying that's going to happen. And I certainly hope it doesn't happen for the sake of investors, because investors need to see the markets move higher. Traders, especially futures traders, we don't care if it's going up, going down. The only thing we don't want to see is sideways, because that grinds on your nerves a little bit. That's why we love futures. What else you want to look at, John?
No, I think we've kind of gone through everything today. So,
okay.
Yeah. Well, I'm going to say once again, there's going to be gaps on Sunday. I said it last Friday, and there were, and I think it's going to happen again. You can position yourselves right now with limited risk by buying options. Buying options, not selling them. Limited risk. Whatever you pay for the option is all you're going to lose if you lose it. But you can position yourselves right now for that. Holding futures over the weekend is pretty risky.
The difference this weekend, it might come in higher on Sunday night. Last Sunday it was lower and it went higher. This time it might just gap and go.
If they come up with a cure and they announce it over the weekend, if somebody comes up with a cure and they announce it over the weekend, then it's going to gap higher.
You'd see a rally. Boy, if they come up with a cure, this market's going to explode. Sure.
Mm-hmm.
So that's a good point. Something else to keep in mind.
Last Friday, I said something's going to happen this weekend. I don't feel good about it. And this Friday, something may happen, but I feel a little more positive about it. So there's
nipping it in the bud today, which they're obviously trying to rally this thing right now. But if they can nip this decline in the bud and we can get back close to positive or even positive, it really would make a big difference to the whole scenario.
Yeah.
So,
gotcha.
Okay.
All right, John.
Thanks.
Have a great weekend.
All the best.
Take care, John. All right. You want me to take the charts, Dwayne, so I can go through my recap really quick?
Yep, go ahead. Take them away. Guys, when I come back, after Michael does a recap of what happened in the live training room this morning, I'm going to walk you through all of the Concierge Trade Alerts that our traders had access to last night, the Logic 247 for the entire week, all that, answers to your questions, and more when I return. Michael, it's all yours.
Okay, here we go. And this is what, I don't know if John's still there. I can't see if he's still there. I know he had a phone call. Yeah, he's still there. Okay, this is what we talked about last night. We said last night during the partners meeting, for those of you guys who are partners who are not active partners, you should become active partners. And for those of you guys who are not partners at all, you should become partners. But we said last night in the partners meeting that it's going to get down to this level right here. And then we said if it does get down there and we start closing up above the BBC. Now we had one close above the BBC here, but it wasn't a whole bar above. It was just a little bit of a body above. If we get a whole body above the BBC, you see down here, this is on a 30-minute chart, by the way. You see down here, the cycle is screaming up. And we have a little bit of divergence, a little bit of separation between the green line and the cycle. So what it should do is break this swing high. I think that's going to be the first step, breaking that swing high. Then it's going to choke up right here and pull back down to the BBC, and then move all the way up here to 30-30. And that's what we pointed out last night. So if you're, if you're not an active partner, you should be. And if you are an active partner, then you got all that information yesterday. Okay, so I'm just going to jump into everything right here. Hold on. One thing I wanted to point out was the prices for plane tickets. John was talking about American Airlines, and I usually fly American, but right now JetBlue is a little cheaper. Not much cheaper, but a round trip ticket right now, because I do have to fly up to Boston or drive up to Boston. Either one is going to take me a bunch of time and money, but the flight is only $228 round trip. Now that's pretty cheap. I used to fly over 60 times a year, and I paid over $1,000 for the same flight. And when he was talking about the airlines and all that.
Mike, can you hear me?
Yeah, I can hear you.
Yeah, listen, I just wanted to tell you, the rally is definitely catching traction now. This is good.
Good.
This actually could turn into a really big rally. And look, Guild, G-I-L-D,
Yes.
is, just a second. Guild is speaking of cures, Guild is acting incredibly well today, and that's one of the big contenders for treatments. So,
okay, so so something could happen over the weekend, and if it does, we're going to open with gap highs.
Yeah, for sure. And look, just check out Guild, because there was a big down move off its first rise, and now it's kind of taken it all back, and it actually looks very bullish right now, this stock. So,
GILD?
GILD, yeah. I mean, it almost looks like they could announce the cure on Sunday night. It's kind of an interesting idea you came up with. So
yeah, that's what I'm thinking. I'm thinking right now.
Well, they've got the cure. Look, they've got their remdesivir is definitely. I mean, look, some of these people have recovered without even any drugs or any treatment. So
yeah. Well, I'm hoping that Macy's supposed to go on a cruise in a week and a half. And I'm hoping they're going to have something to cure it, but apparently it's not affecting kids as much as it is adults.
Right.
And that's a good thing. So
right. No, this is this other thing is this Guild has been locked in a range like for a whole year. It's making new 52-week highs here again very soon, so it's like a very big deal. I think this. And they just bought that FTSV, and look at the way the stock is going. So they must have made a very good purchase there. So, okay, thanks.
Okay, all right. Now, what I was saying on a 30-minute, and what I just went back to the 30-minute because John was saying that it's making an up move right here, and what we need to see is a close up above the BBC right here. We've got a little bit of bullish divergence on the 30-minute chart, but the cycle is screaming upward. And it's saying we're going long. We need to get across of the MA1 in the BBC. Now, this is all the technical stuff. Okay, this is just the technical stuff. We need to get across of the MA1 in the BBC. The MA1's starting to flatten out right here, but we're getting into the point of the day where it's going to make a decision one way or the other. And no matter what it does right here, if somebody comes up with the cure over the weekend, or even a potential cure over the weekend, we're going to gap up on Sunday. Okay. And the way to play that is not necessarily in futures, but play it in options. And Bombsy, I mean, you were asking me this last weekend on Saturday. I think you texted me. This weekend, I said it last weekend, it was going to gap down. This weekend, I'm thinking it's going to gap up. So how do you do that with limited risk? Options. Okay. You're never going to lose more than you pay for an option. Okay. When you're buying them. If you're selling them, you have an unlimited risk. But if you're buying them, you have limited risk. So that's what I would say. Go look at, IDO, Guild, a couple of those companies. American Airlines. Now, if they come up with a cure for this, I was just telling you that the round trip ticket for me, that's what I'm saying, Mark. You would buy calls. I mean, you got to price them. The second out of the money is usually the best delta for me, usually. Walk you through one hypothetically, please. Okay, hang on. Let me see what I got open here. I think I have an option. Here it is. I have this option chain open right here. So what you would be looking at is something right around here. You'd be buying calls that are just a little bit out of the money. And, $29.55 right now. You're going to pay a lot. The premium you're going to pay right now is based on the volatility. But if you buy one, and these are March 6th calls, so you don't want to do those. You probably want to do March 9th. You're going to pay a little more for that. But you're going to pay a lot more for that. Okay, well, March 9th, what is it? Yeah, no, you're going to pay a lot for the volatility. The premium is going to be in the volatility here. They're not going to be cheap, but, I'll take a screenshot of this right now. I'm not going to do it. Look, that was a quote from Trump yesterday. But I'll take a screenshot of this right now. I don't like holding stuff overnight. Need to. What? Okay. Well, anyway, we'll look at this on Monday morning. But, oh man, I'm 12 minutes late from my meeting. Hang on, let me get through this really quick. Okay, as much as I can. I think it's going to get up here, and it might gap up to that level. Really, we have a level here we got to get through. We have a level here we got to get through, and then it's straight up to this level here. Okay, so we should have some good trading on Monday. So I'm looking forward to that. Sunday night, actually. Sunday night would be great. You see this right here on gold right now, our highest probability trade setup, and look what it just did. Now, why is it the highest probability? Because the cycle is blue going up. We have good separation here. The MA1 is blue going up, nice steep angles, both of them. We tested the BBC. So what that means is price went up and it pulled back and it hit the BBC right here. And the BBC is a support level. Okay. And from the BBC, you had everything else just going straight up, saying it was going to move. If you had one trade a day, if you waited around all day for one trade, that would be the one. And it happened a bunch of times today. I'm not going to go through a whole bunch of trade setups today. I'm just going to go through what I actually did, because it was literally a ton of trade setups. In the 4-tick range, it was actually kind of hard to trade because things were moving around so fast. But I mean, we did really well this morning. And let it load some more data. There it is. Okay. So this is gold. Wait, I didn't go through the first part yet. Hang on, I gotta go through the first part. Yeah, here we go. All right, good afternoon, everybody. Today is the 6th day of March, 2020. Since we changed the format a little bit around, It's taken a little bit to get used to. But today is the 6th day. Did I say January? The 6th day of March, 2020. If you have not taken a free trial with us, go to the homepage here at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. You can click on that or any one of these green buttons down here, and it will bring you to this page, where all we ask for is your name, your email, your phone number, and you tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Okay. Now, that's pretty easy, right? Take our free trial. That's Dwayne. Let's see. Where am I? Hang on. There I am. 30 years ago. That was during the war. And I like that shirt. Yeah, so I don't get to pick out shirts anymore. All right. The spreadsheet. Hang on. I got to bring it over here to bring the spreadsheet back up. I don't know why that thing closes all the time. But I will show you the spreadsheet. We had a good day today. Bob Z, did you see that shirt? That's pretty special. Okay, now let me go back here to this. Now, usually the best delta is going to be a couple out of the money, but you got to look at the volume and all that. So you can go all the way down here and buy this. These are going to increase in price because you see the open interest and the total volume. So you're not going to have any problem dumping these, buying it or getting rid of it. Okay. And that's important. And it's half the price of these up here. So if you're considering doing it, like right now, a 3,000 call is $1,100 right now. And there's a lot of room between the bid and the ask. So you see that? See how it just changed right there? You could put it in an order to split the bid and the ask. And you'd probably get a fill. Somebody's probably going to buy it if you do that. Okay. Yeah, Wayne, that's true. Let me just read what Wayne just typed in. He said, according to the news conferences by the medical people in charge, even if they find a cure tomorrow, it will not be available for at least 3 to 4 months due to necessary testing procedures before mass inoculations. Not only that, if they found a cure tomorrow that was good for tomorrow, there's still everybody that's sick that is touching things. And the thing lasts, on surfaces for 5 days. So, it's still going to spread, even though they find the cure. But, again, go for a walk outside. Don't go for a walk in the mall. But yeah, the market's still going to react right away, Bob. All right. So I was going to show you the spreadsheet. Hang on. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. And I am now 18 minutes late for the meeting. Today we had a great day, and we missed a ton of the trades. So I'm just going to go through the trades that I hit and the ones that I outlined. Okay. Today we made 14 ticks on the euro, 15 ticks on crude, 10 ticks on gold, and 16 ticks on the ES. That put us up 537.5 per contract on the morning session. Today took 5 minutes and 1 trade to get to the goal for the day. At that point, we're up $150, and we took a total of 12 trades. So on the month now, we're up $2,232. That's over 5 days, averaging $446 a day. That is 2 contracts. 1 contract, 2 hours per day. And on the year, we're at $9,185. That's over 41 days, averaging $224 per day. That is one contract, 2 hours per day. Okay. Okay, let's get into it because there's a lot to get into. This is gold. All right, and next week, this day next week, we're going to roll all our H contracts. Okay. You see all this movement here in the pre-market? Crazy. And then the markets opened up, and then I had to restart. This morning, right about this time, I had to restart. But, there were a ton of opportunities in here. There was a long trade right there. Then the cycle got too steep. And I said, I've been saying all week, when the markets are crazy like they have been this week, look down here at the slingshot. All right. And then look at price. Look down here at the slingshot and make sure the slingshot's right. And then look at price. Okay. And so there was a short opportunity right here. Perfect opportunity. Our highest probability trade. Red there. Bounce off the BBC. Red here. Good divergence. Bang. All done right there. It didn't, because I had to restart. I think my first trade was on the ES. So I'll show you that one in a minute. There was a momentum short right there that didn't go anywhere. It would have been a break even. Let me scroll through this quickly because it's getting late. There were short opportunities here and here and here and here and here. And it turned around, it flipped around, and it did give long opportunities right here on the way up. But it was still, a missing market. Well, in here, it got really messy in this time frame. Okay. And then in here, we had a shorting opportunity here and here. And here for that. Now, that was all in 1 second right there. 1 second. So right here, seeing it come together, you had to have your order on, and then you could have gotten in. Okay. There was just so much opportunity today. I should have been up, $5,000 a contract. But I spent a lot of time teaching and training and talking. And, I could have done it just on gold. There was a period this morning where I just had the ES up, and I said, okay, well, the ES is going a little bit nutty. So let's just focus on that. And I did. And I showed all the trade setups there, and we'll get to that in a minute. But right here, there was a long trade setup here and here and here. And short trade setup here. Highest probability. Bang. Now, you only have to hit one of those a day. The goal isn't to make $5,000 per contract. The goal is to make $100 per contract. Okay. And there were so many opportunities today. If you didn't make $100 per contract using our trading system today, or our trading strategy, well, we need to talk. Okay. Because there were so many opportunities. So many. I mean, it just happened again and again and again and again and again. So here's where we took a trade. I picked up 10 ticks on that one, and I had 2 break-even trades after that. There's one. You see all these ellipses that I had drawn in. I was doing that during the market while I was talking about it. And, here's another one right here that I didn't do. Another one right here that I didn't do. And, this is twice the goal for the day right there. So is this. So from here to here was less than a minute. And you had the opportunity to get twice the goal for the day if you were on your game. I am right now 24 minutes late for a meeting that I had at 1 o'clock, Bob, and I have another one at 1:45. So that's why I'm going through this as fast as I can. But we can talk tomorrow if you want. Actually, I have a meeting tomorrow too. But we can talk. Just give me a call. If I can pick it up, I will. If I can't, I won't. Okay, don't call right now though. All right, on the euro today. On the euro, we had 3 trades. We had this one right here. The first one I picked up 8 ticks on. The second one was a break even, and the third one I picked up 6 ticks. There were more opportunities because the euro was bouncing around all over the place. You can see it. You know, just short, short, short. It didn't go anywhere. Long, break even. There were a bunch of opportunities on the euro as well. And crude oil was bouncing all over the place today. So let me back crude out. I mean, we only took 3 trades on crude. We were plus 15. We had 1 break even, 1 plus 5, and 1 plus 10. But that's not all the trades that there were. You know, there was a trade there. There was a trade here. There was, look down at the slingshot now. Follow down at the slingshot. And see when it pulls away like that. Look up here at price. Bang. There was a break-even trade right here that I took. Right in here. There were more trades right there and right there and right there. Scrolling back because so far you've only seen the break-even trade. Okay. This one started out with plus 5 right there. And then we picked up 10 more right there. Now there was another trade there. Looking at the slingshot. Another trade there. Another trade there. So, I mean, there was just a ton of opportunity today for everyone. You know, no matter what market you traded. Now the ES, you know, we started out with the ES today. We placed our first trade on the ES. I'm going to back that out so you can see it a little better. We started out with the ES. And let it load some more data for me. And now load the indicators. There we go. Yeah. Yeah. See how nasty this got in the afternoon. There's just so much data. You know, it was holding a lot of people up today. The data problem. Because there was just so much. Now this morning, I opened the room up at about 7:45. And so the charts are running. And then I got in and I had to restart. But there was a shorting opportunity there and there and there. And we actually grabbed this one for 12 ticks. And there was a follow-up right there while I was filling my log out. Then there was a long there and a long there. And short there, short there. We picked up, what did we pick up on this? 4 ticks here and a break even there. And those were all our trades on the ES today. All the trades that I actually did. Now, when you look at it, you know, there was just a ton of opportunity. It was bouncing all over the place, and I was recommending to everybody today, as I did on Monday, and I probably will do this coming Monday. Pick a market, focus on a market, because there's going to be huge volatility. And, you know, you can't, there's another break-even trade there. Oh, I'll say this. I'm not going to say you can't, but I'll say this. I had a hard time trading it all today. Okay. And if I have a hard time trading it, then, you know, newer guys, well, you know, you're probably going to have a harder time trying to trade 4 markets at once. And I don't recommend anybody that it's new do that. One other little thing I wanted to point out was right here, this orange line. I'm sorry, Mark, I am late. But this orange line right here, this line I drew Sunday night before the open because I knew it was going to be a sticking point to the markets. And, you know, this is on a 30-minute chart. And you can see how many times it came back down and hit that line and hit that line and hit that line from the bottom. Now it's going back up to that line from the bottom. Now, that is where price was before the gap. Okay. And when we have gaps like that, knowing where the price was before the gap is significant because it's usually going to come back to that price over and over and over again. Okay, that's it. With that, I can wrap it up because I am now half an hour late for a meeting that I had 30 minutes ago, and I have my next one coming in 15. I just told you how I arrived at it, Bob. And I did it on all the markets too. If we go to a 30-minute here, let's see. Here it is down here. See, came right back to it. And the euro was the only one that didn't come all the way back to it. It came almost all the way back to it. See, it's right there. Now, I'm trying to scroll. There we go. Get more data. Okay, it did come back to it. Good. Well, February 28th, that was Friday. And no, it didn't come back to it. It was right here. It almost came back to it right here. Almost. And it still hasn't. But crude oil, put that on the 30-minute. It dropped right through it, but it did come back to it several times. And, and it was a long way away from it. And well, gaps always get filled. Almost always get filled. All right. The euro didn't get filled yet. It's going to get filled eventually. But, when crude oil gapped so far away, I mean, I knew it was coming back, and it only took it a couple hours to come back. And the ES had like an 80-point gap. See, there's the orange line. Now I drew that Sunday night. And what night was Sunday night? It was the 1st. Okay, so right here, March 1st. I drew that gap. This is where price was trading before the open Sunday night. And I'll do it again. I'll do it again this weekend if I can. Jada pushed dinner so I could do that. Because, it was 6 o'clock. And that's dinner time. And she pushed dinner so I could do that. And I said, it's going to get back here. And, it gapped down, came right back up. Within what? A few hours, came right back up. Nailed it. Well, first it came right back up here, almost hit it. Then it went down a little bit, pulled through it, pulled back, went back, through it, came back to it. That's the way the markets work. And they do it over and over and over again. Okay, that's it. With that, I can pass it back out to fabulous Phoenix, Arizona studio way over from South Mountain, America's largest city park. Sorry, I went on and on today. I did the recap on the 4-tick range chart, and then I did a bit of a recap of what I said last week, last Friday.
Gotcha. On
the 30-minute chart. And this week, Sunday, I'm telling y'all right now, Sunday at 5:55, go to your computer and put a line on the chart where price is. And then
Well, price will
when the market,
be where it was at the close today.
yeah, I
Is
guess
that-
you
is
can
that-
do that
is that
too.
what you're saying?
At the close today, yeah.
Okay.
Put a line on the chart at the close today. And on Saturday, I'm not Saturday, Sunday, at 6 p.m. Eastern, watch the open, because I think something big is going to happen over the weekend, just like last weekend. And if it does, there's going to be huge gaps. And pay attention to those gaps, because price is going to come back and fill those gaps. And it may do it in 2 hours, it may do it in 12 hours. But price is going to come back and fill those gaps. And there's different ways of handling that. You don't have to do it with futures if you don't want to. I mean, if you want to do it with micros, if whatever market you're looking at has micros, you can do it with micros to limit your risk in the overnight margins. But I don't think you'll have to do it overnight. Usually it's going to happen before, 4:15 p.m. Monday. But you can do it with options. Look at options, and you can price them out. You're going to pay for the volatility. So to minimize the cost of options, if you buy near-term options, you're not going to pay for time, but you're going to pay for the volatility. So, think about it that way. Okay. Okay. That was a long talk for me. In the afternoon session, in the morning session, I talk constantly, but in the afternoon session, I'm usually pretty quick. I do have one meeting to apologize for and one meeting to start in a few minutes. So I'm going to jump, okay?
Alrighty.
All right.
Thanks, Michael.
All right.
All right, guys.
Thanks for coming, everybody.
All right. Have a great weekend. As you can see, price here failing on the 30-minute chart, S&P at the BBC. That's what we anticipate. That's what happens. That's how markets work. You see it here, you see it here, you see it here, you see it here. It holds more often than it doesn't. That's your definable edge. This is a business based on probabilities. The second you try to make it about anything more than a probability, your ship has sunk. Remember that. It will serve you well. And remember this, whatever brought you here will not get you there. Something has to change. Okay? Now, last night, I'm going to give you one more shot here at grabbing a screenshot, if you want them, of the Concierge Trade Alerts from last night. We're going to move through those the hours late, but we'll get them covered. So stand by. Here we go. All right. 5. There's last night. 5, 4, 3, 2, and 1. Okay. All right. Now that came out at 6:35 p.m. Eastern. So that's going to be the 1830 candle on this chart. Right there. Okay. So what we anticipated, price pulling back to the BBC, because price always reverts to the mean. When price approaches a weekly trading zone from below, we anticipate resistance till proven otherwise. When price approaches the BBC from below, we anticipate resistance until proven otherwise. Now, the alert that you just saw that went to all of our traders last night, both on the Concierge Trade Alerts and on Logic 247, was to sell 30.12. Initial target was 30.10. The trade to target was 29.45/46. After consolidating at this lower zone, we actually spiked down, and it ended up, the market made $4,600 per contract available off of this entire move. Now, this morning in the live training room, I took the charts for a moment. Michael was on break. Right here is the 10 a.m. candle, right? Big, green, bullish candle. So what does the world do? The world goes long. But I say not so fast. Give it a minute, okay? Give the market an opportunity to do what the market does. This swing low, I drew this rectangle this morning in the room for everybody to see. I said if price can close above the BBC, then the next obstacle to the market moving higher, which would be back to the zone above, because price is always trying to get to a weekly trading zone. When price is below the BBC, it's trying to get to the zone below. When it's above the BBC, it's trying to get to the zone above. And BBC just stands for bull-bear cross. When price crosses above, we anticipate higher prices, bullish. And when it crosses below, we anticipate lower prices, bearish. So bull-bear cross, okay? So price did, it spiked up right into this area that we expect to be resistance. Why do we expect that to be resistance? Okay, price is coming down. Buyers stepped in. We're able to drive it back to the BBC. It turns this into an important price, important area. On the way down, we sliced right through it. But as you can see, when we pulled back up, support becomes resistance. And then the entry that I gave the guys in the live training room this morning was as we got right back below the BBC here, you had just a beautiful window of opportunity to trade it short back down to the weekly trading zone. And as you can see, substantially further. Price is now pinched up between the blue and climbing, CFMA1. I just refer to it as red and falling, blue and climbing. Red and falling is bearish. Blue and climbing is bullish when it's on the other side of the BBC. Okay. Here, it's just signaling the pullback to the BBC. So we pulled back here and here and here. Here. So far, it's held every pullback. Okay. Now, as price pinches up, this becomes a very dynamic area. Because you've got the BBC, you've got blue and climbing, you've got the weekly trading zone, all in this compact little area right here. A close below blue and climbing is going to turn blue and climbing into red and falling. So a close below blue and climbing, go to your smaller time frame, you get your high probability low risk entry and trade it back down to the swing low here. I put it on the chart earlier, 29.40 to 29.35. Okay, that's a nice little window of opportunity. It's 5 points. Hey, 5 points. Who doesn't want 5 points? All right. So that's the S&P. Here's the Dow. Last night's alert, sell 26,140. And the swing low, and again, it's the same thing. The indices behave. You had the leg, the retracement, the leg, the retracement, the leg, the retracement, and now we're battling it out. What will happen here is price will manage to close above these wicks, but that wicks shows you that price is being rejected here. Okay. Rejected, reached up again to that same area, rejected. If this red candle, and we're on the Dow now, but you see how the dynamic's the same. This red candle closes below blue and climbing. You've got a beautiful window of opportunity to short the market down to the low right here, which is just above the weekly trading zone. Alexa, 26,140 minus 25,375.
26,140 minus 25,375 is 765.
Okay. So from the entry to the zone, 765 points. Alexa, 765 times 5.
765 times 5 is 3,825.
Okay, so this was down to the zone, not the spikes below, but just to the zone. That was a $3,800 per contract move. Okay. Every one of our traders had an opportunity to participate in the S&P trade, the Dow. Here comes the NQ. And notice the dynamic is the same. Price pulls back to the BBC, right? Our trigger to get short, 86.52. Alexa, 86.52 minus 84.17.
8,652 minus 8,417 is 235.
Alexa, 235 times 20.
235 times 20 is 4,700.
Okay, so from the entry that all of our traders received last night down to the zone, $4,700 per contract move. On the pullback, just like the one you saw on the S&P, you saw on the Dow, now here's on the NQ, that doji right there represents an indecision. That lends credence to exactly what you see happening, price getting back below the weekly trading zone. Got a little window of opportunity there to trade down to the lows. If price takes out these lows, I have a feeling it will, then your window of opportunity is down to these lows right here. Okay? And then, of course, the trade to target would be the weekly trading zone below. Now, Fred, I know you had some questions earlier, so now would be the time. Post those in the chat box, and any specific questions that you have about any of these moves, I'd be more than happy to answer them for you. Last night, the alert I gave our traders on crude was to sell crude at 46 bucks. It dropped $4,000 per contract so far. The next weekly trading zone, or the weekly trading zone, right where we are now, is 4230/35. Now again, these weekly zones, they go out to the partners Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up, so that everybody has a chance to get them on their chart and be ready. So let's say 4235. Okay. Zone above that was 4345. So do you see what happened here? Price slices through the zone. The zone fails to be good support, so price, we want to see it pull back up and confirm that it's going to be good resistance. It's got to be one of the other, or we're just in a sideways market and we want no part of that. So price pulls up. That wick sticking up above the zone, that's bearish, even though you got a green candle. As we start to print red here, you simply go to the smaller time frame. You enter using the high probability, low risk methodology that we teach, and your trade to target down here at 4235. Now, that's if you were just taking this particular trade. But remember, the alert last night was to be short 46 bucks. Okay? So we did the S&P. Okay, you see where the S&P is? We've got 12 minutes left in the life of this 30-minute candle. I know the other guys were bullish and were looking for a rally, and it's possible that we could still get some late rally coming into the market. But there's nothing on the chart to indicate that. Okay? Well, we put in a low and we spiked, and we did, again, Everything that I do is based on logic. I don't go with my gut feeling. I don't have any secrets. If you become a CFRN passport holder, you will be taught a logical method for trading the market, a logical strategy based on high probability entries accompanied by low risk. There's a lot of very complicated strategies and methodologies out there, and most of those are very expensive. 10, 15, 27,000, one in particular. And a lot of them they'll try to find out how much you got, and they'll just try to get as much of it as they can. Okay? We're a little bit different. Our methodology is simple, it's inexpensive, and it comes with unlimited one-on-one mentoring. Don't forget, 9 out of 10 traders fail. Period. Why? Well, because no one has taught them how to trade. You could teach yourself to drive a car, might get hurt. You can teach yourself to fly an airplane. I suppose you could teach yourself brain surgery. But they're all probably going to be very painful experiences. Don't want to say that you can't teach yourself how to trade. The question is how much time and how much treasure is that going to take? So you get to make the decision which route you go. You either find someone who's willing to teach you how to trade. Now, someone who's willing to teach you how to trade is a very different scenario than somebody who's going to sell you some really clever indicators and a PDF and then give you a hearty handshake, a pat on the back, and wish you all the best. We mix and mingle with all of our students around the clock. We use Telegram as our messaging client, and that thing's live 24/7. We go to work Sunday night at 6 p.m. Eastern, and I'll be bringing up the Logic 247 alerts for this week in just a moment, and you'll see exactly what was happening last Sunday night and Monday. We've got discussion channels. We've got a channel for the weekly trading zones. We've got a public channel, private channel. We do most of our communicating in the Telegram channel outside of the live training room and this broadcast. So finding a teacher is difficult enough. Finding a teacher that's willing to give you around-the-clock support, it's pretty difficult, okay? So this may be the opportunity you're looking for, and it might not. You have to determine if what we do is right for you. That's why we give everyone a 5-day free trial, no credit card required. You come, you hang out, you can use our platform, use our indicators, I'll teach you the strategy. And at the end of the week, if the light bulb comes on and you go, whoa, this isn't easy, but it's simple. I can learn how to do this. Well, then this is for you. And you save a whole lot of time and treasure in the process. Okay, see what price is doing. Okay. Now, this isn't magic. It's not some ancient secret that I found in an urn in a cave in the Gobi Desert. It's logic, okay? It's all very logical. Now, I've shown you the Concierge Trade Alerts. Let me show you what has happened this week with Logic 247. Okay, we're in week 83. We've had a total of 39 alerts. 10 never triggered. That left us with 29 actionable alerts. 2 of them were stopped out. So that's 7% of the actionable logic alerts were stopped out. Now let me show you what those trades look like. Again, we're in week 83. Last week, week 82, we had a total of 28 alerts, 3 never triggered. That left us with 25 actionable alerts. 2 of them were stopped out. So last week, 8% of the actionable alerts in Logic 247 were stopped out. Last Sunday night began week 83. The time you see on the screen is Mountain Standard. The first alert was to be short the S or to buy the S&P. Thumbs up means price made it to the target. There's the Dow, the Russell, the NQ. Z's means it took a snooze, it just never triggered. So that's crude, that's gold. There's a long on the S&P, long on the Dow, long on the Russell, long on the S&P, long on the Russell, long on the NQ, long on crude. Okay, now all of that happened on Monday. This was Sunday night, right here. Right there begins Monday at midnight, because remember, this runs around the clock 24/7. So now we're to Tuesday. Long on the S&P. Don't have a disposition on this one. Long on the Dow. Short on the S&P. Short on crude. Notice, actually, these, you'll see them at the bottom. It says from above. This is a short on the S&P. Short on the Russell. No trigger on the NQ. And this is a short on crude. As we move into the next day, S&P long stopped out. S&P long never triggered. Dow never triggered. NQ never triggered. This Russell never triggered. Crude never triggered. Gold never triggered. We were hedging the ES here. That was stopped out. No trigger on the S&P. That's the S&P short. Dow short. NQ short. Crude oil short. See, here's from above. That one that we didn't have a disposition on. Thumbs up. Made it to the target. Made it to the weekly trading zone. So that's 66 to 46. It's a 20-point move. At $50 a point, that's $1,000 per contract traded. Short on the S&P, short on the Dow, short on the NQ, short on the S&P. So there you have it. That's the entire week. Now I'll show you the recap of Logic again. I just showed it to you a second ago. We've had 39 total alerts. 10 did not trigger. That leaves 29 actionable. 2 got stopped out. That's 7% of actionable alerts were stopped out. Now that's a very good week. We average 20% being stopped out on any given week over the last 83 weeks. It might be a little better than 20%, but yeah, I like to be conservative. So, that's what you should anticipate if you're considering becoming a CFRN passport holder. As a passport holder, you own the indicator set for life. You have lifetime access to the live training room, Monday through Friday, from 9:30 a.m. to 11:30 a.m. You have access to unlimited one-on-one mentoring. You receive the Concierge Trade Alerts, and also the Logic 247 alerts. Okay? For more information, call Valerie at 949-42-EMINI, or you can send her an email, support@cfrn.net. Okay, you see where price is now in the S&P on the 30-minute? Again, not magic, not a secret. It's not a secret because I'm willing to teach it to you. It's just logical. Okay? I do not know the future. I am not clairvoyant. I'm not psychic. I do not have crystal balls. I do not know what the market is going to do next. What I do know is what the next high probability move is. Now, a lot of the websites that you go to or the emails that you get pitching you on some trading strategy, they intimate that they actually do know what's going to happen next. Be very, very careful in those situations. Because per God, man, that's you and I, we cannot change the past, nor can we know the future. And those two things are inextricably linked for eternity. So if somebody starts telling you that they can tell the future, be careful, be cautious. Keep your hand on your checkbook. I'll never try to pull that wool over your eyes or any other wool. I got no wool. I'll teach you what we understand about markets. I will teach you my logical strategy for doing exactly this. The end goal is that the day comes, you don't need me, you don't need Michael, you don't even need the alerts. Because I teach you the principle behind the alerts. So you go look at a chart, you find your own entry and your own target, and you set your stop loss. That's what it means to become a CFRN passport holder. Everything a trader needs, one low price. And right now, you can start training Sunday night, 6 p.m. Eastern, Globex Open. When the market's open Sunday night, you can be a CFRN passport holder, ready to learn, ready to earn, with no money down, no interest, and no payments for 6 months, thanks to our partner, PayPal. Thanks, PayPal. There's the number again, 949-42 Emini, support at CFRN.net. Arturo, if the Logic 247 alert makes it to the initial target, then does it expire or can it re-trigger just like the CTA? It can re-trigger. Fred, what you should do is you should get a hold of Valerie, book a mentoring session. I just broke down all of the trades on the 30-minute chart. If you want to take a look at the 5 minutes as well, just get a hold of Valerie, book a mentoring session. I'll be happy to spend 45 minutes with you. We'll screen share. You'll be able to see my charts. And then I'll just make a list of questions and we'll just walk right through it and I'll get every one of them answered for you, okay? All right. That brings us to our good word for the day. So stand by. Find my notes. We've been talking about marriage the last couple days. Most of the folks in this audience are of marrying age. My notes, my kingdom from my notes. All right, try it again. I'm having an issue here. Hang on. Let me see if I can fix it real quick. Otherwise, we're going to just head off into the weekend. All right, so we've been talking about marriage. Today we're going to talk about your benefits package. Do you got a benefits package? In Malachi 3:14, we read, "You have said, what's the use of serving God? What have we gained by obeying his commands or by trying to show the Lord of heaven's armies that we are sorry for our sins?" In the last book in the Old Testament, Malachi, the Israelites asked, what's the use of serving God? It's a question that non-believers and sometimes even believers ask, particularly when times are hard and our faith is tested. The psalmist gives us the answer. Praise the Lord, for all who fear God and trust in him are blessed beyond expression. Happy is the man who delights in doing his commands. His children shall be honored everywhere, for good men's sons have a special heritage. He himself shall be wealthy, and his good deeds will never be forgotten. When darkness overtakes him, light will come bursting in. He is kind and merciful, and all goes well for the generous man who conducts his business fairly. Such a man will not be overthrown by evil circumstances. God's constant care of him will make a deep impression on all who see it. He does not fear bad news, nor does he live in dread of what may happen, for he has settled in his mind that Jehovah will take care of him. That's why he's not afraid. This is why he can calmly face his foes. He gives generously to those in need. His deeds will never be forgotten. He shall have influence and honor. That's your benefits package. That's Psalm 112, 1 through 9. Now, the Israelites said, what do we gain from serving God? Well, the benefits of serving God include, and are not limited to, happiness, children you can be proud of, success, influence, and honor. Note in particular the words, he does not fear bad news nor live in dread of what may happen, for he has settled in his mind that Jehovah will take care of him. These blessings are all part, but not limited to, your benefits package. It is the weekend. So CFRN Charter says you must spend some quality time with the family. Of course, I'll see you in church on Sunday. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.